Hold up. I think. Okay. What is up? My I accidentally sent Roy the link way too late, like 10 minutes before, and I think he was having some connection issues. So I don't think Roy's going to join us. So we're doing a solo stream today. And then as soon as I went live, my camera and mic decided to crap out on me. So we're going to probably do a shorter stream today, and then link up with Roy for an actual bootleg weekly on later on. Yeah, this is entirely my fault why Roy didn't have it up on his channel, because I accidentally sent it to Roy way too late. I was just in between meetings and he asked for the link, and yeah, oops. Yeah, I can talk about some hymns. Happy to do that. I was going to do a separate video on hymns, which I'll probably end up recording after this. But yeah, glad to be here. I also have to carry more of the weight now on this stream because I don't have another person. So I can't really tune out and read comments as much as I would like to. MBIS is something that I haven't really read up on. I would love to have a deeper dive. I've talked to Manuel about potentially coming on and doing a pitch for MBIS, which could be fun. I know nothing about them or what they do. So maybe I'll ask Manuel about that. That could be a fun video to do. We really wanted to bring back the stock tank videos, but we never ended up really doing that. So maybe we can start it off with MBIS. But we have some 2 days in the market where it's back-to-back amazing gains for the entirety of the indices. Hood, yes, they reported some numbers. I don't know anything about an acquisition, so maybe you're going to have to catch me up on that, because for me, I've been in meetings all day long, so I'm fairly unaware of what happened on Hood's side today. But yeah, the market's been great. Okay, HIMS is on a rampage. It was up 16% today, which is crazy. Roy's not joining. I'm doing a solo stream today, Nate. If you want to jump on, you're more than welcome to. They acquired a Canadian crypto company. Okay, we have to read up on this, and maybe I'll bring it up on stream and I can react to it live. But first, let me talk a little bit about HIMS, because we're definitely in a short squeeze for HIMS. Like I wholeheartedly believe we're in a short squeeze for HIMS. SoFi is my biggest position. Yes, Kenny. And the reason why I believe we're in a short squeeze for HIMS is because HIMS is essentially increasing on news that they should be decreasing on, if that makes sense. The Trump news was a short-term headwind with HIMS, right? If competitors are forced to sell their stuff cheaper, that is obviously going to hurt the competitors' margins, but it's also going to hurt HIMS's margins, because you're essentially diminishing one of the value propositions of HIMS, being the affordability aspect. And so that is a piece of news that should have dragged HIMS down, realistically speaking. Number one. Number two, them raising $870 million with regards to that, the convertible notes situation, that should have brought the stock down. Like, remember when SoFi did this last year, it dropped the stock like 15 to 20%. And so both of these news should have dropped the stock down. And yet on both of those days, it was up double digits. I do and I mean, we're going to take a look at the numbers when the new numbers come out. I think tomorrow might be the day, or definitely this week, we're going to see what the numbers, or maybe it's early next week, we're going to see what the numbers are for the short interest for these past 2 weeks. But there's a couple of things that we know for certain on HIMS. Is we know for certain that the 34% short interest, which was their record highest short interest, that came in on April 30th. That was only 1 day or 2 days after the Novo partnership, and it was a couple of days before their earnings. So over the past 2 weeks, we've had the Novo partnership, we've had HIMS's earnings, we've had the new members on the team, the COO and the new CTO, we've had the convertible note offering, we've had the Trump news, and we've had basically all of this macro pressure alleviate with some, negotiations going on. And it seems as though there is somewhat of a light at the end of that tunnel. So a lot of stuff is going right, I think, for HIMS. But at the same time, like, I don't think it's that that alone is contributing to a double digit increase like every single day. I think they've been up double digits for like the past 3 or 4 days in a row. And so, there is a very real case to be made that you're going to have a short squeeze on HIMS, and that's what you're seeing right now. And so we're going to see, when the short interest numbers come out, over the next week or so, what that short interest did. And if in fact that short interest is higher, I seriously doubt. I would probably bet money that it's not going to be higher. But if it's not significantly lower, then I stand by what I said on X, that this thing can break into $100. Like, yeah, Nate, if short interest is 31 to 32%, like, I think HIMS can break $100. And the reason why is because that would be absolutely insane, because shorts would still have to cover for the majority of their positions. Now, when you're covering, you have to essentially buy back those shares on the open market. And that, in addition with the actual buyers, creates a completely disproportionate profile where you have a lot of people buying and nobody really selling. And it just drives the price up, because shorts, the more the stock goes up, the more shorts are essentially losing and the more pressure that they have. And yeah, like 150, 200, that'd be insane if we see that happening. But even 100 is what I'm saying is on the cards for 2025. And even 100 would be close to 2x from here. So we're going to see what this ends up being. But again, it's all going to be determined, in my opinion, on what those short interest numbers are going to end up being. Because if those short interest numbers end up at like 24% or 22% or something like that, then okay, you basically saw a big chunk of the short squeeze from 40 to 65. But if the short interest comes in and it's still 30% plus, then I think you're in for a wild ride. And HIMS is something that, like, they're super volatile. They can go up or down 20%. I mean, we saw this, but they're also 130% return in the past month. I made a post about this today, like 130% in the past month. Like, that is absolutely staggering when you think about it. The volatility that this has is all fueled by that short interest. Like, the news is the news and the company is executing, and that's great. And some of that might be priced in and some of it might not be priced in. But the fact of the matter is that the short interest is just fuel on this fire. Yeah, 70% in a week. Like, you cannot with a straight face tell me that 70% in a week is just because the company is executing and they released great Q1 numbers. That doesn't, like, there's something underlying there that doesn't add up. And that to me is where I'm like flagging, okay, there's seriously pressure being put on the shorts. Because if you have 70% appreciation in stock in a week and you still have 34% short interest, like, I would love to meet those short sellers, because I would want to know what their reasons are for shorting this thing and still holding on to their position after a 70% rally, because I seriously call BS on that. Like, I think that would have to be significantly diminished. You would have to have the short squeeze right now. And that's the only way I can feasibly explain our move to $64. But we'll see. We'll see what happens next week, right? If it's still 32%, that would be insane. I don't know. I have a bunch of HIMS leaps. I know Gerge has a bunch of HIMS leaps. HIMS is my third largest position, I think, maybe second largest position now. I'm reducing some of my Tesla position, and I bought HIMS. I mean, I publicly bought another 12 grand worth of shares at $40 a share, like literally before their earnings came out on earnings day. And those shares are up, close to 50% in the past like week. So there's something that is going on here. The other thing to consider is like their cost of borrowing is increasing. So this is this comment here. Well, I mean, this is for uh, cost to borrow against SoFi benefited shorts. For HIMS, it's hurting to short these platforms like HIMS more than SoFi. Yeah, so the cost of borrowing is going up. It's getting more expensive for short sellers to keep their short position on HIMS. And I do think that when you put all those things together and the velocity that this company has from a news frequency perspective, I think it like I don't know. I'm strongly in that camp that we've seen a short squeeze and we're witnessing one in real time every single day with HIMS. Now, if you come to me and you say next week, hey, Tevis, like they still have 30% short interest, I don't know what to tell you. Like, I honestly don't know what to tell you. Can't stay and watch, but was wondering if you are taking any gains on HIMS. Yeah, Charlie, this is a great question. I have a long-term position on HIMS, and I'm not taking gains on that position. I had about 1,600 shares called away at $46, which seems like the stupidest thing in the world right now. But keep in mind, this was like an earnings play, and I have leaps that I'm going to be rolling out of. Around this range is where I rolled out of my leaps last time, and the stock fell back into the $25 to $30 range, which is like I reloaded everything that I had, and it served me very well because I was essentially double dipping. Um, but there's some shares I have that still have a $14 cost basis on them, and I'm not going to sell them because they're in my long-term portfolio. And then there's my other portfolio, which is around wheeling. And with that one, I don't really care. Like I sold cash secured puts on HIMS in the low 30s, and I had a cost basis of like 34, 35 or something like that. And then I got rid of those shares through covered calls at $46, and I made $10 roughly in terms of capital gains, plus the premiums on the way down through cash secured puts, plus the premiums on the way up through covered calls. And so I don't really care if this thing goes at 60 or 70 because on that chunk of money, I made a really, really good return. I think my wheeling portfolio is like plus 30% year to date or something ridiculous like that already. And that's because I was making money on the downturn as well with cash secured puts. Obviously, I ran out of money like 2 weeks too early there, but the cost bases were good. I mean, even for SoFi, I in the same portfolio, I was writing cash secured puts at 14, at 13, 12, and 11. And I think my cost basis is like 13 or something on SoFi. And I'm writing covered calls. I have covered calls on 7,500 SoFi shares for June 6th at $16 per share. Those might get hit. Again, I don't really care if those get hit because they're specifically in a portfolio that I only use for wheeling, right? And so I'm treating that more like a business, similar to like that TJ school of thought of you have a product that is desirable that everyone will want to buy from you, and then I have my long-term portfolio set aside. And I think organizing it in that way ensures that I never get FOMO and I never make emotional decisions because I still have the bulk majority of my HIMS position and my SOFA position in the long-term portfolio. And then I use the wheeling portfolio just to rotate in and out of those positions. But look, by having it structured in that way, what I'm ensuring that I can still run the wheel, but I'm only doing it heavily concentrated in stocks that I believe in over the long term. So I'm doing it on SoFi, even though the premiums are not that amazing. I'm doing it on HIMS, and the premiums are amazing there. And I'm doing it on Tesla. And those are the three ones that I'm wheeling actively on that portfolio in big volumes. However, I think once this next batch of Tesla gets called away, I have covered calls I think for next week or 2 weeks from now for 350, which are definitely going to get called away. Well, let's see. I think once that Tesla gets called, I'm probably going to pivot that cash over and start running it on Amazon or Nvidia, just because I think it's going to be more fundamentally sound with Tesla posting declines every single quarter, and there's a lot to prove out there. Now, I'm still holding my long-term Tesla position in my long-term portfolios, but in the swing trading wheeling portfolio, again, it's like 3 picks, and that's pretty much it. And those are SoFi, HIMS, and Tesla currently, and then I'll rotate the Tesla out. But I think, look, if we go into the $70 range, if we break all-time highs, you could have a double top scenario where you go into 70 and you get rejected off of 70 and you go back down. You could trade sideways for a while, or you could break through the previous all-time high and go into the 80s and 90s. And then it's like psychological resistance levels above that. I will start to wind down some of my leaps positions. I have $30 leaps, $35 leaps, $65 leaps, uh, 55, I think, leaps. I have a whole bunch of different strike prices, but they're all for January 2027s. So I'm going to start rolling those off. But in terms of the long-term shares, I'm going to keep those. And look, if it does go back to the 30s, I'm fine with that too, because I can make money on the way down through cash secured puts, and I can also build back my position through cash secured puts. So I'm totally fine either way. Yeah, $80 leaps. Again, I think having the leaps be at a higher strike price, it'll be more volatile, but it'll also allow you to have more upside if you have like 15% days every day or 70% weeks. So HIMS is a beast. It's its own unique animal. I think it's one of the top performing, if not the top performing stock year to date 2025 in the market. Yes, this is absolutely nerve wracking for me. This is why I don't do solo streams, because I don't love um, the pressure of talking to however many of you are here without having somebody to bounce ideas off of. So I am definitely not as comfortable with it as Tanner or Amit may be. Okay, some other topics that Roy and I were going to cover. NVIDIA has earnings that's coming up shortly here. I think Nubank reported earnings today. They're down like 6% after hours. Their numbers seemed okay. I haven't been listening to their call. I'm sure Tanner has been covering them, and he's going to give me the lowdown. I'm going to probably read their report. Actually, do we want to read their report right now? And we want to take a look, or have you guys been avoiding Tanner to come to this channel because you want to avoid new? We'll do a quick look. We'll do a quick look. Yes, this is the real reason why you're here. I'll answer this in just a second. All right, so let's take a look. Nubank reported earnings today. 118 million customers, adding over 4 million in a single quarter. 98.7 million monthly active users. Yeah, okay. Sounds good. I'll cover it quick. Brazil, Mexico, Colombia, activity rate exceeding 83%. Revenue surged 40% year over year to 3.2 billion, 62% expansion in the interest earning portfolio. In Brazil, nearly 30% of adults consider Nu their primary bank. 4.3 million new accounts, 19% year over year increase in customer growth. Why did they fall? That's what I want to know. So if anybody knows where it's coming from Tanner stream and you know why they fell, I would love to know that. It might just be guidance, but I'm not sure there. But yeah, for Nubank right now, I don't hold any shares in Nubank. I only hold leaps in Nubank, and I think the leaps are $15 leaps for 2027. So I'm pretty break even at those. I think I might be down like 5% on those leaps. Nate, yeah, if you want to hop on and we can talk HIMS, that you're more than welcome to do that. I'll send you the link. But I was going to record a video after my chat with Roy on HIMS, and I realized since it was just me that I just gave away the whole video to you guys. Yeah, I think currency risk is one of the reasons why I don't hold Nu. That and the fact that they're an international company in Latin America, like their growth rates are amazing, and that's all well and good. But at the same time, like I don't really invest in any I don't even invest in Canadian companies for that matter, for the same reason, right? Like I think the dollar milkshake theory is very much a reality, and I want to be invested in U.S. equities because that's where I believe the majority of the macro growth is going to be. That's where I believe the global eyeballs are going to be. If I'm growing up in Belgium or in India or in Indonesia, I'm going to be looking to invest in U.S. markets, and that's just how that's just how the world is right now, right? So you can find opportunities in Latin America and Africa and Asia with developing nations, and there's a lot of companies there. But for me, I just prefer to invest in U.S. companies. So Nu is not really a position where I have actual shares. I just have leaps, and It's tiny compared to the rest of my portfolio. Uh, are you buying Palantir like a mid at all time high? Did he actually buy at 130? Let me see. Yeah, Palantir is 128, dude. What the hell? I'm no, I'm absolutely not buying this. Are you kidding me? No, I'm not buying this. Their currency isn't that bad. The region is stabilizing. Yep. Um, emailed you about hymns. Did you see? No. I'll take a look after this stream. I don't really check that email too much. He bought at $123 before they reported earnings. Well, I mean, like it's up, so I guess that's good. It's funny. I'm gonna call him out on this stream, and I don't know if he's watching or not, but he might just give me a call afterwards. Steve calls me today, and he's pissed, and I'm like, dude, why are you mad? Like we're having a massive green day, and we had a massive green day yesterday. Like, why are you pissed? And he's he's pissed because his covered calls are like somewhat underwater or getting close to being underwater. And I'm like, Steve, it's gonna be fine. Like tomorrow is gonna be a red day. You're gonna end up being okay. Like, don't worry about it. And he was just like, dude, freaking Trump, this and that. Like, why is the market so green? It's so irrational. It's exuberant. And I was like, Steve, like, we're gonna be fine. It's gonna be red tomorrow. So there's problems and there's problems. Kelly is here. Okay, Hood acquisition news. We can cover it now. Like I said, I have not seen any of this news, so I'll just Google it real quick here. And then I also want to talk about this, so let me bookmark this and I'll talk about it later. Yeah, Steve's pissed, trying to get out of his covered calls. Yeah, he has NVIDIA 128 covered calls, which he talked about. I wrote some covered calls on NVIDIA. Actually, yeah, I was chatting with Tanner today, and while on that phone call, I wrote covered calls on NVIDIA. So you guys, again, similar to HIMS, and I told you this on the SoFi podcast on Fridays, FinTech Fridays. I said HIMS is going way up, and take it to the bank. And I said, not financial advice, but you can pretty much bank on it. And what did HIMS do? It's at $64 right now. And when I was telling you guys about it, it was at like $38 or $39. I did the same thing with NVIDIA. And if you guys want to know what strike price and what expiry date, let me know in the comments, and I'll share with you my NVIDIA position if you guys want to make some money. Okay, Nate is going to join shortly. Elijah, you're also welcome. Kelly, you're welcome. Gurge, whoever wants to join, more than welcome to. I was actually in Belgium in November, I think, or October. Like basically 6 months ago, I was in Belgium for the first time. It's a beautiful country. Highly recommend. It's it's great. I went to Antwerp and then I went to in Brussels. But we were just driving through because I drove through. I did Rotterdam, Amsterdam. I did a couple of other places in the Netherlands, like smaller towns, and then we just drove all the way straight down. All right, what was I going to talk about? Yes, the Hood acquisition. All right, let's see. Their investor relations page should have this up. Let's take a look. Let's see. All right, this one I'm guessing. Hood to acquire WonderFi. Let's take a look. All right. Summary of pending acquisition of WonderFi. WonderFi, it's Toronto Stock Exchange, owns and operates two of Canada's longest standing regulated crypto platforms, BitBuy and CoinSquare. Wow. Okay. I know those companies. That's interesting. That's really interesting. I actually have friends who, that's interesting. BitBuy and CoinSquare allow retail and institutional customers to trade and stake various crypto assets under an investment dealer license. WonderFi's primary regulators are the Canadian Investment Regulatory Organization and the Ontario Securities Commission. They have 2.1 billion Canadian dollars under custody, so about 130 US dollars. They have about 3.6 billion Canadian dollars in crypto trading volume and 58 million Canadian dollars in revenue. All cash consideration of approximately 36 cents per share of WonderFi stock, representing a total equity value of approximately 250 million Canadian dollars or 180 US dollars. What's up, Nate? Just throwing you up here.
What's up? How's it going?
It's going well. Thank you for saving my ass on the solo stream.
No worries, dude.
Okay, cool. So let's talk about. Did you see this news?
Yeah, no, this is crazy.
Okay, cool.
They're going like crazy, man. They're such a good company.
Expected to close in the second half of 2025, subject to customary closing conditions, including share. Okay. Expected to close. Is this like a regulatory? Yeah, regulatory approvals. Because I was like, why would they announce this if it's not even closed yet? Yeah, Kelly, what are you doing here? Oh, I thought only men were watching. Pretty boy Tevis. Kenny, you're too nice. Strategic benefits. Accelerates our entry into the Canadian market through a well-established and regulated platform. And I will say, guys, is this a coincidence that I came 2 weeks after my conversation with Vlad when I asked him to break into Canada? I think not. So, fellow Canadians, you are welcome. So the license allows them to operate it as a regulated crypto platform in Canada with flexibility to increase product offerings, subject to regulatory approval, serves as a complement to our pending acquisition of Bitstamp by broadening our institutional offering across geographies. Wow. 61 coins and staking capabilities with high quality tech infrastructure. That's really interesting. Let's take a look at WNDR. What did WonderFi trade today? Up 35% today. It's a penny stock, bro.
Damn. I didn't even know that was public.
Yeah. It's well, actually, it's interesting, right? Because this is where the arbitrage is. If you guys want to make a guaranteed 2 cents on your investment, guaranteed 2 cents, what you do is you buy this thing at 34.5 because the closing price is 36 cents per share. Now, where does the other 1.5 cents come in? It's basically the risk associated with this deal not closing and or the time value of that money from now and until when this deal closes in the second half of 2025. But if you're like, I want to earn 1.5% from now and until whenever this deal closes, it's basically baked in, right? That's not financial advice. That's just an observation. Please don't sue me. Welcome, Gurge.
What up? What up?
I think this is the first live stream I've ever seen you on, bro.
Oh.
And you're on mute.
That's not working.
Hello?
What up?
Hey.
We can hear you. Can you hear us? Nope.
Kelly is fangirling.
No, I can't hear you right now, but I'm fixing it.
All right.
What a crazy day for the markets.
Dude, it's like pouring rain.
Oh, same. Yeah, no, it's going crazy out here.
Okay, we're good.
What's up?
Hey.
How you doing?
I'm doing well. I showed Tevis my hymns call position like a week ago, and I was like just been geeking out about it for like the past few weeks.
Man, I wish I bought calls, but it's fine. Hindsight's 2020.
I showed Kelly my Leaps position for the 30s because she was sharing with me. She was flexing on me on her Palantir and her position.
Yeah.
And I was like, here's my paltry hymns gains, and she was like, that's cute, Tevis. But yeah.
She was just posting about it today. Her Palantir, yeah, she like reposted her tweets from like a few years ago.
Oh, I should repost mine. I'm one of the OG Palantirs.
Yeah, dude. She's got great cost bases on all those things. She just buys when people are like, buy. She just holds forever.
Yeah.
But yeah, I think the Leaps was the way to go. Man, this thing is way too volatile. And this is what I was telling Tanner today because we were talking about selling options. And I was saying, like, HIMS is such a prime candidate because it is a fundamentally sound company. that is actually growing, but at the same time, it's so volatile that the premiums are so lucrative for you to run the wheel on.
Oh, it's insane. There's 80. I sold 85s this week, and it's like 25 cents a contract. Like, are you serious? Like, that's insane. It's like that's another 40% move from here in 3 days. It thinks is going to happen, and still gives it a 25% premium per contract. So I sold 85s. I think it's easy money, but
sold 35 cash secured puts.
No, I sold 85 covered calls.
85 covered call.
Yeah. For this Friday, it's 25 cents a contract.
For this Friday,
it's insane. 25 cents a contract for this Friday.
25 cents a contract.
Yes.
Dude, I bought. I'm not gonna lie.
Cents. Yeah,
I bought a $85 strike call expiring this Friday, and it was like 16 cents when I bought it.
Yeah, and it's already now like 25 cents.
That's insane, dude. How can you have a $20 delta from where it's trading right now in 3 trading days?
Yeah,
and still get 25 cents.
That's why I was like, this is so easy to me. It's a 40% move, and it's not in my full position. Like another 40% move in a week. Like I'm okay letting those shares go if I have to. But
this is what happens. This is what happens when this fucking stock is up 15% daily for like the past week, man. Like people are like, oh, it's gonna continue going up 15% every day.
Yeah. It's up 130% this month. It's just
Nate's been posting some evidence, like maybe the shorts are like quadrupling or pentupling.
Yeah, they're not even. They're still taking shares off the market. Like short shares available are still decreasing every hour.
And the borrowing rates went up a few days ago too, like substantially.
Yeah, I mean, I don't know. Again, like you guys heard my spiel at the beginning of this. Like I think this is a short. Like we are witnessing the short squeeze in real time. If in fact we haven't made a significant dent in that short interest, then this thing can get bananas. Like 85 can be hit. And this is the thing, like so one of the things that I do for my portfolio is whenever I trade options, I like log it in an Excel sheet and I ran a pivot table around like, okay, which tickers have I made money on? And HIMS is absolutely the one that I've made the most amount of money on, but I've always lost money in terms of covered calls. Lost opportunity cost money.
Yeah.
But I write crazy cash secured puts in the money. Like if it's at 64 right now, I'd write cash secured puts for Friday for like 68. And those don't really get called. Now, of course, again, not financial advice. This is volatile as fuck. But the point is that it's just one of those stocks, like it has so much momentum right now, so much positive trajectory that it's just crazy, man.
Yeah, when it was $25, not financial advice, I sold $45 puts for Jan 1 of next year. And so I made a buttload in premium for those contracts.
Yeah, like I'm not actually writing, 60, whatever, 65, 60. Like I'm not doing that right now. But what I'm saying is it's concerning to me because I recognize that my emotional side is more comfortable writing $66 cash secured puts expiring this Friday than it is writing $85 covered calls, expiring this Friday. Like I understand that that's completely irrational.
Yeah.
But it's like irrational exuberance, right? And that's the thing you got to be cautious about.
It's the life of being a quadrillionaire.
I'm not that. The worst thing that Tanner ever did for me was start that stupid shit.
Start spreading the truth, you mean?
No, I mean it's getting there now with HIMS, but
there you go. See, now you're owning it. Now you're owning
there
it.
You go.
There we go.
Yeah.
Yeah, HIMS will definitely be my next winner after Palantir, I think. Like the next big one, because I was in Palantir DPO.
Nate's trying to write a magnum opus right now. He's gonna have a book. By the time he retires, then he's gonna pass to his kids. And he's gonna be carry this legacy.
You don't even need that many winners, right? Like you need. If you do a 10x on Palantir and you do a 10x on HIMS, like you will be set for life pretty much. Because if you're in your 20s or early 30s, like you can just leave the rest in an index and you'll compound all the way there and like turn your brain off. Yeah. Right. It's just.
But I know I'll be DJing the rest of my life, so
yeah.
I can't do it. I'd be too bored just putting the S&P. I'd be so pissed off. Like 5% gain this year.
You've come to the right channel, Nate.
Dude, I was in Amit's chat, and somebody was like, "Why would you put money in Nvidia? It's only going to be a 33% gain in a year."
Yeah,
like
it's insane.
Yeah.
It's insane. But like, I also get it. It's
Yeah.
crazy.
Yeah, so we're spoiled for sure.
Well, it's crazy because like I looked at Airbnb, and
Oh, you see the new thing they released today? They launched like a massive.
yeah, that's why I was looking at them, because they launched this like huge, and we can talk about that if we want to. But like, I looked at their stock price, and they bought them at like $80, and they peaked at like $168, and it was like a 6-month,
They've been
in between. And I'm like, dude, it's so freaking easy to find 2X's in this market with a lot of these companies
Yeah.
that it's just insane.
Airbnb has been bouncing it like that. Like I have it in my watch list. It's been bouncing up and down 160 to 120 like after like a couple months over and over again.
All right, let me put on this news.
Yeah, it's super cool what they're doing. It seems like I bet it's gonna be like, I don't know. I feel like it's gonna be expensive, but
Yeah, I didn't even fully wrap my head around what they're doing.
they're offering like services and experience now, rather than just like renting out a house or a hotel or whatever. You could do like experiences, and you can read the news or whatever from the CEO.
Let's play this video.
Yeah, go for it.
So this is Brian Chesky, the CEO of Airbnb, posted this on X today. I also realize I'm going to get demonetized AF for this, so I'm just going to mute it.
Wow, services. We can talk over it as it goes.
So, like, does this mean that Airbnb and Uber are kind of going to be competing / Airbnb and Uber?
What I think this is for, the services portion of Airbnb, is like I went to Victoria recently, and like the person running our Airbnb also gave tours of the city and like those horse carriages. So I think this is what that kind of is targeting, is like if you need a tour guide and the person you're renting or whatever Airbnb from can offer that service to you.
I think it'll compete. It won't compete much. It'll be a little bit. Like what they're offering is more of like hair, makeup, training, massages, like photography, chefs, those sort of services, not like order food to your house. It's more of more like pre-planned stuff.
Let me read this take from Wealthy Readings, and if you guys don't know Wealthy Readings, then I suggest you take a look. All right. So they say, hard to wrap my head around this Airbnb news. I originally said I would be somewhat disappointed if it were to be the revamp of their experience feature, which it kind of is. So they have an app revamp here. And then on the services front, booking an Airbnb can be annoying to do. For many, to do food mainly. What?
I think it means like
when
you book an Airbnb for a week, like trying to get food's annoying. So maybe like you can incorporate ordering groceries or something.
Yeah, although many would just use Uber if available. Same for other services like makeup. As many book Airbnbs to go to parties or gym sessions. I mean, it's interesting. On the experience side, I continue to see what the potential is, but not sure anything has changed compared to what's already existing. Overall, pretty interesting, but I wouldn't say as exciting. I'm a big user of Airbnb and will try it as soon as possible. Like, if you think about Airbnb, like, where can they possibly expand that has high margins? Like, I could see how they could come to this conclusion around, okay, let's now offer all the complimentary stuff, around this offering.
Yeah, I think it's pretty cool. Like you said, I don't think it's crazy exciting. About to see how it plays out, but it makes sense. Like because some people do like bridal showers or like bachelor parties, and you can like order and cater food to the Airbnb with that set timeline, and you can order like fun activities to that same. So that like makes sense trying to incorporate that. Yeah, and I bet if they bundle it as like sort of like a service, they probably could get some better margins. But as a whole, I do feel like it's more hype than we'll see how it kind of plays out over time. But I think it's pretty cool. Can't hurt.
Interesting thought, right? Because like it really will depend on how they choose to position it, because they can position it as like a package. Like, hey, you can go into this tier, and if you're a catering service, for example, or if you do set design for whatever it may be, like you can then have that as a part of your perk in your membership, or you can have it as an add-on for whatever extra markup on top of the service. Like, it's cool. Like I went we did like a friend's trip to a cottage that we rented out on Airbnb, and it was like 13 of us. And I remember going to find all the groceries and all that stuff was something we need to do because the house is empty, and then we had to make sure the house is empty at the very end. And I could see, as I'm thinking through this, I could see how it would plug into the core value proposition of you getting a place, but it would only really be applicable to either unique destinations where you need an experience. That it doesn't apply to many people who are like owning multiple properties and they themselves don't live in that same state or country. Yeah. Or it would apply to larger groups that need some type of help with regards to catering.
Yeah, like I think this is going to take over, like especially in some cultures like mine, like weddings usually last like a week, and that's a big market, at least in Canada, because we have such a Asian like population. It's such a high percentage of our population, and this is going to target those sorts of services. Like, hey, if you can, instead of going to a banquet hall, you can just rent out somebody's house as like the staging grounds for that banquet, like whether it's a wedding banquet or whatever, and you can order the full service instead of having an Airbnb for all your guests and then they have to drive out to a different banquet hall.
Yeah. Can I share my screen?
Yeah.
I'm gonna show
throw it up in the screen.
Yes. Let's see. Share screen. Window. This window. Boom. Does that work? Perfect. Yeah, so I just want to show this so we kind of can visualize it better. Because I actually think, now that I'm thinking about it more, you can incorporate it in a lot of cool ways. So if, like we said, Nashville, always a crap ton of bachelor parties. And so if you can bundle it as like, oh, you're renting this house, are you also making it a party? You just click on a checkbox and then it recommends you all of these sort of events. And then it recommends you like the best caterer in town and like the reviews. And
not even that, like here's all the alcohol for your pre-drink.
Yeah, no, exactly. I think that actually is pretty cool. But like you said, for like 90% of Airbnbs where it's just like they own a few properties and like a few cities, it doesn't make sense. But I can see how it could be pretty cool. And if you're like a person that just wants a centralized place to find your hotel or your Airbnb and all of your activities, like it makes sense, I think.
I mean, look, I don't think it costs Airbnb much, right? It's at the discretion of the individual host that it's going to choose to add on these services or not. And from a user perspective, it's like, okay, well, I could be a user that never uses any of this stuff, or, now having the option to do it is just the cherry on top, So it doesn't really cost them anything. There's no real risk that they're taking adding this on. It's like a natural complementary offering that they can expand into.
Yeah, I think it's pretty cool.
Pretty cool. I don't know. Airbnb has been one of those interesting companies where like I've never got into, but I could see myself getting into. I mean,
I'm the same way. Like I like the CEO. It's a platform, and I like platform-based companies.
Yeah,
but I don't know. It just doesn't. Yeah, it doesn't appeal to me as much.
Yeah. Okay. What else do we want to chat about? We talked about Robinhood. We talked about Hims. We talked about Airbnb.
Lemonade. I know you have a position in this. I recently started a position in this.
Why'd you start a position? Let's go there.
I mean, I've had them on my watch list for a while. I just didn't push on them right away because Hims was just a way bigger opportunity for me in my eyes. So whilst I've been trimming Hims on this way up, I've just been putting those.
Unbelievable.
It's a trim, not a sell.
Bro, his entire position is leaps. What do you want him to do?
Yeah.
Keep holding, baby.
It was like 90. It was like 90% of my portfolio.
It's going to 100.
I've been putting a large portion of it in Lemonade, and their stock price hasn't moved that much with this whole rally. Even on the way down, it kind of bottomed out at 25 or 26, I think, and it hasn't gotten back to where it was before the Liberation Day. And their OPEX stays stable, and it's probably going to stay stable basically forever. And their lifetime value from their customers is just going to keep growing.
Yeah. I mean, look, I think one of the things that I didn't really love about Lemonade was that their net loss didn't really have a huge move in the right direction. Because again, the thesis, I think, for me with Lemonade is I want to get in a couple of quarters before profitability happens, because when profitability happens, like the entire market is going to essentially get in and the stock is going to get a ride up. And with Lemonade, I got in because I was just looking at their in-force premium going up, right? And I'm like, okay, well, they're not making money right now. They're still booking losses, but they're moving in the right direction. And this quarter, it sort of plateaued a little bit in the net loss perspective. But at the same time, like all their metrics are, are increasing. They, I think, posted a 47 million EBITDA loss, which was basically what they guided for. They increased gross profit. They did a 27% increase in their in-force premium and like their top line. So they're moving in the right direction. It's just a matter of when will they be profitable, and will it come this year or will it come early next year? But sometime within the next 4 quarters, we will see the first profitable quarter for Lemonade. And then if that trend holds up, then it's going to be off to the races. And I think that's a very exciting thing, especially because, I retweeted this thing this week around Lemonade. Let me pull it up right here. So this post is from Brian McCormick, that I had on Lemonade. And basically he said, look, Lemonade's share price is currently lower than it was 6 months ago. Before Investor Day, price is flat despite increased growth guidance to 30% from 20%. 30% from 20% CAGR, 10x in-force premium, all while reiterating upcoming profitability. So they're saying, hey, we're going to be profitable, we're growing, so on and so forth. And they laid out this vision in their Investor Day for the next 10 years and how they're going to grow into a massive, massive valuation. And yet the market just isn't buying it. And so I think that provides an opportunity for sure for Lemonade.
Yeah, like their profitability guidance, their 2026, I think maybe it's first half 2026 hasn't changed in like the past year. And I think those net losses, a large part of it was because they just started their car segment like a quarter ago, and it's over 100%. Like they lose money on that right now, like substantially. But if you follow the trend line, it's been falling a lot. And I think either this quarter or next quarter is when car will actually not be a drag as much as it was on the net losses.
Yeah, it's a company I don't know much about, but I'm big into getting into companies like right before they turn profitable. And so Palantir was my big one where I bought it in 2021, 2022, and then it turned profitable in late 2022 or early 2023, forget. And so, ever since then it's been on a tear. Same with Hood. Once they turned profitable, they went on a tear. Hims, once they went profitable, they went on a tear. And so it just makes sense to buy in when right before it becomes profitable. Yeah. And so I like to, it usually helps risk reward too. Like, yes, Hims was $2, but that's because they were losing so much money.
Yeah.
And so when they went profitable, it went to 20. And then to me, the risk reward is a lot more, appealing.
Yeah. I totally agree. And I think that at some point towards the second half of 2025, the market is going to start front running Lemonade profitability and buying in. And I think that Lemonade is just going to get a lot more chatter because they're going in the right direction. They just need a couple more quarters to prove it out. It's funny. We did our Christmas giveaways and Roy wanted to give Hims. I wanted to give Hims. Chris wanted to give Hims. And as it so happens, like we went down the list and I think Roy was the first to go and then he gave Hims and sort of screwed the rest of us. And I think Chris gave TMDX at Transmedics to Steve and I gave Lemonade to Chris because it's one of those stocks where I'm like, okay, well, over the next 4 quarters, they're going to be close to profitability, if not even inching through profitability. And I think that the market is going to start to, pay them more attention. Now, obviously, we've seen in some names that, like SoFi, for example, they've hit profitability for 4 quarters and the market still isn't like giving them a lift like it's giving Hims or Hood or Palantir. And Lemonade is in one of those sectors where it's like it's an insurance, so it's not that sexy, but it's also, you could argue, in AI, right? Because that's how they do all their, underwriting. So we'll see.
Yeah, I've never used a product, and so I was curious. I want to get pet insurance, and so I just, while you guys were talking, I just looked up Lemonade pet insurance and typed it on my stuff, and I already got a monthly quote, which is crazy.
I think I replied to one of your tweets with that.
Yeah, you did. Yeah, you told me about that, and I didn't really have it.
Yeah. Their pet insurance is their like oldest product, and it's like the most matured product. So yeah,
sweet. Yeah, that makes sense.
Are you in through Leaps, or do you actually buy shares this time, Gersh?
I have shares. No, my heart rate during like the Liberation Day was sky high. With the leaps.
Insane. I mean, I held through I actually added to my Leaps for Hims when it was down, but that's only because I trimmed the Leaps last time when I went to like 50s, 60s.
These are actual degens. I have like no leaps. I'm just an equity guy.
I think like close to 8. This I shouldn't be saying this, but like close to 8 or 9% of my total like net worth is in Hims Leaps.
That's insane.
It didn't start out that way. They're up like 3x, dude.
Yeah,
that's fair.
No, the Him sleeps from like around $30 have, like if you bought then, like your year to date's probably over 200% easily.
Oh yeah, because like I was buying even earlier than that, right? Because I was writing covered calls on like Tesla, SoFi, and Hims, and then with that money, I was just buying Hims Leaps, and stock was $18, $20, $22. So they're up quite a bit right now. But well, this what else? Actually, hold on. There's a couple of questions here.
It's like the biggest piece of news today was like Trump and Saudi Arabia, right?
Well, actually, let's talk about this first of all, because we're on the Hims topic. What do you guys make of this? Because for me, initially it was short-term bearish, but I'm curious to hear both of your thoughts.
As soon as the first person, whoever I was following, posted that tweet of this, like the pharmacy EO, like I instantly replied and I was like, this is so bullish for Hims. That was my initial reaction.
Why?
Like, because first, they don't operate in the insurance environment, and like even though we didn't have the details the night before when this was announced, like it was going to be somewhat obvious that this is going to be targeted for not generic drugs, like branded drugs who operate within the insurance environment. Because why would they go after generics, which already have seen such a huge accessibility with cheaper prices through like cost plus drugs with Mark Cuban's company and like other compounders like Roe, like Hims and Hers. Like I felt it was obvious that it was going to be targeted towards the branded drugs.
Right. So basically, saying it's not going to target Hims at all.
Yeah.
Mine was more neutral. Like when I first read it, I was like, "Oh shit, margins are going to compress." But as I kind of thought about it more, like Gertz was saying, they're not going to target Hims' core product, but they will. I think there will be downstream effects, right? So like we partnered with Novo Nordisk, and they're going to be squeezed, and so that partnership, I don't know how contractually how it works. Like if it's a guaranteed price on each side, I don't think it would be. And so if Novo's getting hurt, they're going to hurt Hims in that regard of like, we have to offer you guys a higher price because we're getting squeezed. And so I think it'll have some downstream effects. But overall, I don't think it's going to hurt the company. But I don't look at it and go, oh my God, like this is bullish.
Yeah.
I feel pretty neutral. Like I think has some benefits, but I think at the same time. But then also I think about it more like more people will come to Hims' platform.
Yeah, I'm the opposite on that. The reason why I say this is so bullish is because I think it actually forces more companies to go through the Lilly Direct / Novo Direct route. Mm-hmm. Because I think eventually, when this gets legislated, it's not going to be targeting like the direct to consumer or like basically like through the Hims platform, like the Lilly Direct partnerships that they have. It's going to be targeting their relationships with the pharmacy benefit managers, which have been operating in this space for years, ripping off both sides, like the pharmacies and the consumers.
Right.
Oh, that's a good point. Yeah, that's a good point.
Yeah, I mean, I think like right now we have a tweet. We don't have any details around how this is going to play out. For me, I was even iffy on how can he actually do long-term price caps through executive order. Like, I don't think that's going to stick. I think it's like a fear tactic more than anything. Because like how would you do that, right? Executive orders are short-term in nature.
My guess is he's not going to institute a price cap. He's just going to force transparency. Because if you just bring it out into the light, because like the way it works now, like they don't have to give you the data on how they do their claims. The pharmacy benefit managers. So I think the EO isn't going to be a price cap. It's just going to make it so you can view the claims at will, which will expose the kind of corruption, if you want to call it, or like the weird system monopolistic behavior that these PBMs have, and
Right.
that in of itself will force a change, because like it's just going to be out in the open, so there's nothing to hide behind.
Right. Maybe. But yeah, again, I think, it's just something that we need more details on. It's crazy that like the stock was trading up 14% or something like that on this news. But granted, it was a pretty big, macro day. I think that was the day when they announced like we're making good progress on the China trade talks. So like it could have been a nothing burger from this news perspective. But
Yeah, like you said, it was just a tweet, and like we kind of have to wait to see
yeah,
what actually happens from it. If anything does happen, what does happen. But
yeah. So I also want to bring up this question, and I want to get both of your thoughts on this. Where do you see the price by 2030? Like, have you done any type of longer term, analysis on this?
you can go
I
ahead,
have
Bruce, because
not.
I have a lot to talk about.
Well, I haven't. I know Nate has done some like bearish base and like bullish, I think, charts or whatever. But
Yeah.
for me, it's just like I just looked at their 2030 guidance and like just looked at the numbers, and I'm not really thinking about a price target for like 5 years from now or 4.5 years from now. I just
Mhm.
know it's going to be a lot higher than a year. And that's how I kind of move my money, is like I don't really forge a price target for things.
Right.
Like I'll just be like, okay, it's gonna go a lot higher or a little bit higher. I just think of it like that.
Yeah, so there's a lot that goes into it. I think that guidance is extremely weak. Like I think they are sandbagging by like literally 2 years.
Yeah.
Because that's only a 22% CAGR from the guidance they gave this year, which I think this guidance this year they're going to beat. They're probably going to get 2.5 billion. And so I just gave them with the same valuation they have now. I just apply the same price of sales.
Mhm.
And if they do what I think is 35% CAGR a year, the next
Mhm.
5 years, they'll do 10.76 billion by the end of 2030, and that'll put them at a $65 billion company. And so
Yeah.
I think at the time that was like a $200 stock, and I think their valuation is cheap. I think their price of sales is way underneath, and I think by the time they're making 11 billion a year, they'll get upgrades in terms of valuation. And so, I mean, it could be freaking crazy. I feel like, and I know that's like super bullish, but like they're only right now even at $65 at like a 7 or 8 price of sales, and most SaaS companies trade between 12 to 15, and they have worse growth profiles, a little bit better margin profiles, which is fair. And so even if you give them a 10 price of sales, it'll probably be a $300 to $500 stock, I think, by 2030.
Oh yeah. I definitely wouldn't disagree with that at all, because like look, they themselves guided for 6.5, and so if you don't give them any benefit of the doubt at all, and if you're like, okay, they're going to do 6.5, well, $6.5 billion is a 28% CAGR.
Also,
right?
something to call out, by the way.
Yeah.
They guided for in 2020. They guided for 1.2 billion in 2025. They're going to do 2.5 billion this year. They doubled their guidance they gave in 2020. And so, large numbers isn't going to show that they're going to double it again, probably. But I think they're going to get 40, 50, 60% higher than they guided for. So like 10 to 11 billion. And so to me, it's just like, I'm so bullish. And I became so bullish over the past like 3 weeks on HIMS.
Yeah, I mean, they're at an 8 price to sales right now, and you apply that same sort of multiple. Even if you just plug in 6.5 billion, you're going to get a pretty big number in terms of what that market cap is going to end up being.
Yeah.
So, I think anywhere between $300 and $500, like I don't see it being insane if they can execute, because I think all three of us realize that 6.5 billion in 2020 or in 2030 is kind of a sandbag number. Right. And it's just, we're debating right now, is it going to be 8 billion? Is it going to be 10 billion, 11 billion, whatever? But nobody's saying, oh, it's actually going to be 6.5.
I mean, I want to address a bear case right here, because a lot of bears, like as soon as they put out this guidance, were like, oh, they only hit that $2.5 billion number, and they only crushed their 2025 guidance because they're riding on the GLP-1 wave, and that was like unpredictable, kind of, is what some of them say. And like, even if you take out the numbers they made from GLP-1s, like they still would have crushed their 2025 guidance, like at least 1.8 to 1.9 billion, like bare minimum.
Yeah, to me that just shows that the silver lining there is the management team, their ability to execute and ride the waves, because there will be waves, because healthcare is ever changing and there's always going to be trends, and so their ability to spot that and then execute that on immediately
Yeah.
is exactly why they did so well. And sorry for the dog. She's
Yeah, like, dude, like, I mean, again, back of the napkin, right? But like, if you say they're going to do 10 billion in 2030 and they're on 8 price to sales right now, then okay, well, that's what, 80 billion market cap, and they're at 14 right now. That's over 5x. And you take $64, you multiply by 5, and you're over $300 right there.
Yeah, I think they'll do 6.5 billion in like by the end of 2028. And
Which would be
so
crazy because, again, the market is forward looking and the market would start pricing in a lot of these things earlier, right?
yeah,
And the revised guidance upwards for 2030 would be 8, 9, 10.
I mean, even if you give them a third of the price of sales of Palantir, I mean, that's where it gets to me like the possibilities are endless in terms of like the hype, because if they continue to go like crazy, continue to become more profitable, become mainstream like Palantir's become, where like Palantir's price of sales 100, it's so ridiculous. But HIMS get to the point where the price of sales is even 20, and even at 20 price of sales, making 10 billion a year, that's like a $750 stock.
Yeah,
And
you
so
gotta also keep in mind that like they're growing triple digits.
it won't. But to be fair, it won't happen anymore. But
Of course,
still.
dude, I'd be shocked.
I know.
$15 billion company, like nobody's expecting to keep growing triple digits, but they're not going to go from 100% to the next year being 10%. No, they're going to go from 100 to 85, and then the next year is going to be 75, and the next year is going to be like 60, then the next year is going to be like 45, whatever. But the point is like you're still so incredibly early in the story that I don't know. It's wild to even think about how early you are.
I have a point on that Palantir HIMS comparison too. Is by the time like 2028 and 2029 rolls around, like one of the things like I theorize, I guess, is that AI multiple that like Palantir has is like, their price of sales is insane, and a lot of other AI companies will bring up AI in their earnings calls. Like some people think is just to pump the stock price if you just bring up AI in your legacy company. I think by 2028, 2029, a lot of that narrative is going to get shaken out, because right now you can mention AI and everyone will just believe it. But in a few years, it's actually going to show up in like the EPS and revenues that companies make.
And I think that's why Palantir's doing so well, is because they are really the only people that like flaunt AI over and over again, and they're continuing to accelerate every single quarter, continuing to be named and mentioned in more earnings calls every quarter by other companies, continuing to be like in the White House with talks about AI. And so I think that's why they get that premium.
Mm-hmm.
And if HIMS can come in and kind of talk about that, I mean, and I think Andrew knows how to play the game. Like he knows how to talk to hedgies, or I think Anthony Noto doesn't, or like not that Anthony doesn't know how to, but doesn't know how to market the company in terms of like how to position them in a way that like makes them look more appetizing to give them that multiple.
I think a different space. I don't know.
No, for sure. Yeah, no, it is. It is.
Banking,
it's harder. It's harder to be like, we're AI bank. It's like, all right.
Well, not even that, but like the same banking institutions that they're competing against are also the gatekeepers of the market.
True. Yeah.
Right? Like those are the people who set the price targets from an analyst perspective. Those are the people who manage all the large, money from an institutional level. And so, nobody really gives a shit about, Palantir or HIMS or like any of these other companies that are playing in different spaces. But when you're actually like competing from the banking side,
the
money management side with the JP Morgans and the Goldmans, of the world, then it's like, okay, well, it's a little bit different. I don't like this is the more conspiratorial line of thought, right?
I think it makes sense though. I mean, yeah.
Look at this tweet I DM'd you, Tevis.
All right, let's take a look. I don't see it. I don't know where you
blocked you
on X.
But yeah, it's kind of been a crazy, like I really got extremely bullish the past 3 weeks, and I like tripled down on my position. Like sold out of SoFi and sold out of some Hood and went like triple down on Tim's. And so yeah.
I just left a 1-star app review on Him's.
Yeah, Andrew Dudum responded to that person's tweet and was like, he's like, Amit was bringing up like how Vlad Tenev does this stuff. He takes time out of his day to like actually be like talk to normal people once in a while, I guess. And yeah, this is just Andrew Dudum just responding to someone's tweet about how they left a 1-star review.
The only bear argument with that is that Alex Chris did the same thing at PayPal, and PayPal's done nothing.
Yeah, I mean Anthony Noto's done the same thing too. It's like it's like
That's true.
it's a very low sort of.
Not that PayPal's done nothing. The stock has done nothing. They performed fine, but the stock has done nothing.
Whoa! Him's CEO Andrew Dudum announces that the company raised $1 billion.
Another raise?
Dude, did they increase again their convertible notes?
Like this just happened?
Yes. Hold on, let me pull this up. We might have some breaking news.
Holy shit, you're right. Oh my god.
Only on Tez's channel can you experience breaking news like this.
Where is this? Like, I'm not seeing it on their IR.
Just go to his tweet. Andrew Dudum's.
Oh, he tweeted about it.
Yeah. He didn't really give much detail on it though. He just basically like pumped the stock. He just said another billion though. That's
wow.
Louise. They're gonna do. They must be trying to acquire something.
Yes, that's what I'm thinking exactly. Look at this.
They raised $2 billion.
Guys, this is as of 10 minutes ago. CEO of Hims, Andrew Dudum, said, "Today we announced Hims raised $1 billion, our largest raise yet, more than double what we set out for. Thanks for strong demand from a wide range of leading investors. The offering was designed to accelerate long-term value creation and minimize shareholder dilution. They did a cap call transaction along with this."
Or is this him? Is this him just like summing up the past two offerings?
Yeah, no, but like the last one was 874
million. I think.
Yeah, you're right.
I thought it was 74.
No, you're right. You're 874.
Yeah. So first announcement was 450 million, oversubscribed to 800. You guys are seeing me live tweet now. 800, and now up to 1 billion raised.
Yeah, they've got to be looking somewhere to acquire something, because the fact they're like 2.5xing their raise, like something's got to be on the horizon that they're trying to pick up.
I hope they bring some of that production of like the materials they get before they like to compound the medications. A lot of it comes from India/China or whatever, or it's speculated. I hope they bring some of that production of those materials to like the US, because I don't know, Uncle Don might be targeting everything he can get his hands on.
Uncle Donnie.
You think they're gonna acquire like a international?
So hold on, actually, because I wanna here. Let me share my.
Because I feel like if we connect the dots of they're raising more money, they announced for like the first time like international expansion, like keep talking about both of those things. And so to me, which I'm not the biggest fan of, to be honest, but I feel like they're trying to acquire something international, or this is just pure speculation of fun. But
yeah, I would hope it wouldn't be like over like a 600 million market cap company.
Let's take a look at Hims after hours if we're moving on this news or not.
Up 8%. That'd be hilarious if it's like just mooning.
No,
it's just any news is good news. We're in 2021 again.
It's flat. Let's not get it. I mean, it's still wild though. But like, here's the thing though. They already have over 300 million on their balance sheet.
So they have 1.3 billion. Yeah.
Like 1.3 billion. Are you kidding me? That's 10% of their market cap today at $64 that they have in cash.
Yeah.
Like what is going on? They're definitely, I don't know. I don't know.
That's great. Yeah. They've got to be trying to find someone to acquire, or multiple companies to acquire.
Yeah.
Which I love. I love the fact they're trying to do that, especially right now when the stock's $65 and they can do a cap dilution and only dilute us like 5%, growing at 80% a year. Like, do it more, please. I don't really care.
Yeah.
Also, you guys see that Mark Cuban went on Him's house today?
Yeah, Him's house has been killing it recently.
I need to watch it, but I bet it's
watched
good.
your interview with Andrew Dudum, and it was pretty good. Yeah, crazy, dude. Honestly, we're going to new all-time highs. There is nobody that is convincing me otherwise. We're going to new all-time highs for him.
He went from, I don't know, guys are short covering, and now he's like, you know what?
No.
It's going to all-time highs.
I'm saying, like, I'm not saying as it's a bad thing that shorts are covering, but if shorts are not covering here, bro, we are freaking going to new all-time highs. All right. Look at this.
Now you're being soft. You got to give a price target.
Look at this beautiful technical.
Wait, let's draw the line there.
Yeah, right. We can see here, like, this is going to be a straight shot. Not financial advice at all. Please don't sue me. We're not.
I give financial advice. It is going up higher.
This is. I have a banner for this exact reason. Nice and big and bold. Not financial advice, but like, guys, this might have some resistance here. But then it's just
floating the mouse around midair, guys. There's resistance right here and over here.
There's nothing above. There's nothing above.
Oh man.
So
I mean, I think we hit $100 before like August.
Yeah.
Easily.
Yeah, but like.
But we could go back down to 40 within a month just because someone announces something that's like.
The crazy thing is, I would be just as happy if we went to 100 or 40.
Yeah, same. Yeah.
Right? Like, this is the type of technical analysis I can understand.
Just circle in a black area. There's no limit here, guys. It's going up.
Here, this area. There's nothing above. Look, Kelly bought her first HIM shares at like $40 some odd, and now she's up a good chunk on those shares. She's held over a week, so she must be up 70% because this thing has been flying like crazy.
Yeah, that's insane. Imagine buying shares and within 8 days you're up 70%. Like that's like returns of the S&P for 5 years. You just made it in a week. Like,
I literally did that, and I tweeted about it, and I was like, "Hey, I'm buying on earnings day before earnings come out."
I doubled down on earnings day at like $39 or something. Now I'm up 60% just because. Like, all right.
Yeah. So I think we're going higher. That's all I'm saying. At the same time, not a financial advisor. Do your own homework. I am just a DJ on the internet, guys.
Yeah.
Shall we wrap it there?
Yeah, sure. This is fun.
Sounds good.
Thank you, everybody. Thanks, Nate and Gertz, for saving my ass on the solo stream today.
You're doing great.
Thanks. We're gonna be back next week, and Roy hopefully will be there for that episode of Btlg. I am Tanner's only financial advisor. He calls me sometimes. Thank you, and I will check out your email, Sagig, right after this. See you all next time.